everyone, I'm Kerry Stewart from Schoeman Law Inc. Today I'm unpacking a question that comes up in almost every property transaction. Is VAT or transfer duty payable? Because while both are taxes on property sales in South Africa, there is one key rule that you need to remember. A property transaction is never subject to both. It's either VAT or transfer duty, but never both. And importantly, where VAT applies, it takes precedence over transfer duty. So the real question becomes, when does VAT apply and when does transfer duty apply? The starting point is always the seller. Is the seller registered as a VAT vendor? If the answer is no, then the transaction cannot be subject to VAT and transfer duty will apply instead. But if the seller is a VAT vendor, that still doesn't automatically mean that VAT applies. You need to then ask a second question. Is the property being sold as part of the seller's VAT-registered enterprise? For example, where a property developer is selling newly built units, a business selling commercial premises it uses to generate income, or a landlord selling a tenanted office building. In these cases, VAT will typically apply. But if that same VAT vendor sells their private residence, then VAT does not apply and transfer duty will be payable instead. One area that often causes confusion is residential rental properties. Even if they're investment properties, long-term residential letting is generally VAT exempt. So when those properties are sold, the transaction is usually subject to transfer duty, not VAT. Now, there's also a concept known as zero-rated VAT, and this is where things get a bit more technical. A transaction can be zero-rated, meaning VAT is charged, but at 0%. And this happens if both the buyer and the seller are VAT vendors, the property is sold as a going concern, and the agreement clearly records this. A good example would be the sale of a fully tenanted commercial building where the income generating activity continues after transfer. The benefit here is cash flow. The buyer doesn't have to fund VAT up front, even though the transaction still falls within the VAT system. Another important concept is who actually pays what. VAT is generally accounted for by the seller and paid over to SARS. Transfer duty, on the other hand, is paid by the purchaser as part of the transfer costs. This distinction becomes very important when structuring the purchase price, especially in VAT-inclusive transactions. There's also something called notional input VAT. If a VAT-registered buyer purchases a property from a non-VAT vendor, they still pay transfer duty, but they may be able to claim a notional VAT credit from SARS. This can significantly reduce the overall tax burden, but only if the property is used to make taxable supplies. Now, why does all of this matter? Because getting it wrong can be very expensive. If a transaction is incorrectly treated as subject to transfer duty when VAT should apply, SARS may deem the purchase price to include VAT, which means that the seller effectively has to pay that VAT out of their own pocket. And that can amount to hundreds of thousands of rands. So, to summarize, when determining whether VAT or transfer duty applies, you need to look at the seller's VAT status, whether the property forms part of a business enterprise, the nature of the property, so whether it's residential or commercial, whether the transaction qualifies as a going concern, and in some cases, the VAT status of the purchaser. But always come back to the golden rule. It's VAT or transfer duty, never both. Because of the financial implications involved, it's always advisable to seek legal and tax guidance before signing any agreement. If you need assistance structuring your property transaction or understanding the tax implications, feel free to contact us at Schoeman Law Inc. Thank you for watching.